Today's topic, what to look for in a financial advisor. No, I'm just kidding. No, that is the topic though, but I wanted to make a little fun joke there. Like, you're looking at, no, I'm messing with everybody. So this topic actually came from my other side of Physician Love on our Physician Sense podcast and YouTube channel. And we got a few questions in that were really based around what to look for in a financial advisor. When do I need to hire a financial advisor? And I thought to myself, this is a topic we've actually never covered on the channel. So what I did was I actually found a better resource, the White Coat Investor, Dr. Dolly, to go through one of his great blog posts, recently updated, but I think this is one of his originals. It goes back to I could see in the comments, 2015. So I'm actually going to walk through his 8 topics that he says are his perfect financial advisor. But I'm going to add some context from my side of it. So I think that will add another layer to it in terms of, yes, this is what that means. Here's how you read it. Here's what it probably means in real life. So we're going to walk through those 8. We're going to add in some more context here. This is going to be a fun one. We're going to walk through really good topics here, things for you to keep in mind. And this is important if you're looking for your first financial advisor, which maybe this is how you stumbled across it, or maybe you're looking to make a change of pace, right? Maybe you're looking to make an update here. You're looking for a new advisor, or you're just trying to check the boxes on your current advisor. No need to change, but you're just like, you know what? He or she, boom, 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 boom. Perfect, right? So we're going to get into it. As I always try to plug in at the start now, if you haven't subscribed, please subscribe to the channel. Click on the bell icon. You'll get a notification every time we release new content like this. And that's all. That's all we bother you with on this intro. So let me start with this. You might not need one. That's right. From the financial advisor, you might not need one. Now, do I think it's always good to have maybe a double check, right? A second opinion, second set of eyes? I do, but it doesn't mean that everyone will need a financial advisor. Most of the individuals that find us through the White Coat Investor Network, there are some very good DIYers. I sometimes will say that I would put some of these DIYers against other financial advisors. That's how good they are. They understand it. Some of you have a love for it. You just don't want to put the time into it. Some of you don't want to touch it at all. And that's okay. And I think that needs to be said, and it is an important start to this video that it doesn't pertain to everybody, but you need to know your comfort level, where you stand now, and where you're going to go with it. So let me start by saying that note there that you might not need one. Now, for those of you that do, let's add some context to it. So I'll put this blog post, I'll put Dr. Dolly's blog post in the show notes so that you can also reference it. But I'm going to read his first 8. I'm going to read them aloud. I'll come back and walk through each one. So let me read them first. All right. First one, fiduciary duty. 2, up-to-date academic understanding of the field. 3, a meaningful designation. 4, clientele just like me. Again, written from Dr. Dolly, aka a physician, because we call him Dr. Dolly. So that is number 4. Number 5, a reasonable investing strategy. 6, unbiased. 7, fairly priced. Last but not least, tied in with other services. So those are his big 8. I think the actual episode that Tyler and I recorded will actually go live after this video, but I said on that video with Tyler that I thought this list was fantastic, which doesn't surprise me. Jim's been around the block. He knows the industry. So let's start with the first one. Fiduciary duty. By far, one of the most important words in our industry. But let me say this. That word is overdone so much now. And I made the joke with Tyler that I'm actually concerned now that the more times an advisor starts and continues to use the word fiduciary, you should be terrified, right? From the day I started WealthKeel, I was always fiduciary. I never bragged about it. Now, do we have it listed on our website in certain spots? We do. You know why? Because it's a really important word for SEO and Google Analytics and things like that. So it is an important buzzword. And it's very important that your advisor is a fiduciary. But I will say that the more that they start saying they're a fiduciary, I would at least put up a yellow flag on why are they saying this so much? Not to say that they could be perfectly fine. They just really like the word. But the more gray hair that I get, that's been my own personal opinion on this. But I would say that is a really important word to understand what a fiduciary is. In short, a fiduciary has to put your interests in front of theirs. I know if you're watching this as a physician, you're probably thinking, you guys needed a word for that? We did. We did. But that is one that is really important. You should confirm that they're a fiduciary. Usually it's as simple as noting that. It's sad to say this. I'm going to say it out loud. I have heard of stories. I know of stories where some will say they're a fiduciary, but they likely are not a fiduciary. So it could be one that you also always put in writing, right? You say, hey, I had a few questions for you before I move forward in email. Make them respond to you, right? Make them confirm that they're a fiduciary. So number 1, fiduciary. Again, really important word. But if they're screaming at you, I'm a fiduciary, then I would start to be a little bit concerned that there's something else happening there. But important one, number 1 to start with. An up-to-date academic understanding of the field. Yeah, so this I'm going to actually build in a little bit with designations too. So in our world, you guys have your medical CEs. We have the same thing in our world, especially like CFPs, even my CSLP, my student loan one, that require you to continue to learn. Now, I would always hope that as an advisor, that's not your bare minimum. Like I always hope you're trying to learn. I call him the king nerd. His name is Michael Kitces. He's in our industry. He and his team now, his team is massive, just very detailed topic. And we're talking not just like investing based, but how to build a practice properly, how to look at property and casualty insurance. Here's tax planning. Even some of the software that we use. One of my favorite softwares today is called Holistiplan. Even the seminars that they're putting on for tax planning, how to use the software, but also property and casualty insurance. I guess I've never really thought about number 2 that much, but maybe that's because I just have a love for it and I always want to learn a little bit more. But you should confirm that they are staying up to date. Literally put time on my calendar. It's just called education time. And because when you get an email, I don't know if it's this crazy in the physician world, but you get an email like, hey, this webinar is now live. You're like, well, can't do that webinar right now because it's 2:00 on Tuesday and I'm about to head into clinic or whatever the example would be. So I keep a list and that's how I come back to track it. So you should have an advisor that has a love and a true desire to continue to learn more. Now that one I do believe is a little bit harder to like, hey, are you a Kitches Premier member? That one's probably a little bit harder for you to confirm. I think that's going to be one that you maybe just kind of pick up over time. Even in the DIY world, like the Bogleheads, right? Just someone that's always trying to learn a little bit more. So that one's important. This one's a little bit easier. Number 2 is a little bit easier based on number 3. As soon as you start to see more and more designations like CFPs, CPAs, EAs, enrolled agents, CFAs, you know that they have another level of continuing education, what we call CE as well. So number 3 now, meaningful designation. Now this is another one that is... Our industry is not simple. It's not easy to follow because you think that you have a perfect checks and balances, but then there could still be, bad players mixed in there. So here's the list that Jim lists, Dr. Valley lists. CFP is one, a CHFC, a CPA/PFS, or a CFA. I am a CFP. I will be a little bit biased here. I think CFP is, for most, the minimum bar you're looking for. You want to see someone that truly loves the comprehensive part of financial planning. So that's why that CFP is really important from my perspective. Again, a little bit biased here. Can't hide that. CFA. You don't see a ton of CFAs in the personal financial planning space because usually a CFA is leaning more towards like the actual portfolio builds like inside of the mutual funds, or maybe they work for like an investment firm. Not to say that you can't find that. Very hard test. 3 levels of testing on that one as well, similar to the CPA. Very hard test, very smart individuals. If you see that, they did some studying. Same thing with CPA. And for CPA, I'd even put in an EA here, an enrolled agent. CPA is a little bit more thorough. I shouldn't say a little bit. It's much more thorough because it covers different forms of tax, where the EA is more of like a personal tax, for lack of better words. CPA is also another 3-layer test. I believe I'm getting that correct, but CPAs did some time. They should be very efficient on the tax side. Same with enrolled agents plugged in there. CHFC is one that I'm not as familiar with, but one that I think the further you go towards retirement planning, that is a good designation in there. But again, setting the bar on, hey, if you had to pick one for true financial planning, CFP should be your bare minimum. Now, with that said, you can have CFPs that are still bad people and they're slinging products and they're doing things that aren't good, right? That happens, definitely happens. You can also have someone that's not a CFP and they're one of the world's best financial advisors. So you need to keep that in mind. This list is going to be your checks and balances, but it doesn't mean it's perfect. You could have someone that checks all these boxes and guess what? They're still kind of crummy at what they do. Keep that in mind, right? Keep that in mind. All right, moving along here because I have spent a lot of time on the first 3. Clientele, just like me, speaks for itself, right? Who do we work with? Well, click on our website. We work with physicians. We work with doctors. Yes, you could argue that's high income professionals. What else is different from them? There's actually a lot. You get into contracts, you get into disability insurance, you get into physician mortgages. But if you're watching this and you're not a physician, I realize this title is a little bit more open-ended, so we can have a lot of great viewers coming in here. If you're a high income earner in tech, there is someone that works just like you, works with people just like you. I got one for you. There is a financial advising firm that only works with Chick-fil-A operators, right? So if you own and operate Chick-fil-A, this financial advisor only works with you. That's how specific and nerdy our industry can get. So you're looking for someone that understands you and your people. Retirees is another common one. That's probably your easier one to find. But the nerdier you get with your topic, I can almost guarantee you there is someone that works with people just like you. So confirm that. A reasonable investing strategy. I'll simplify this one in terms of what we do. We love modern portfolio theory. We believe in the efficient frontier, or as I like to say, we like to keep it low cost, diversified, control your emotions. That's actually the most important part of any investment strategy. Control your emotions. But this is a great question, right? On your first date with your financial advisor, right? Ask that question. What is your investment philosophy? What's your strategy? What do you do? There's no such thing. If they say yes, those are the things you're paying attention for. But, again, this is from Dr. Dolly's list. So you're thinking here, low cost index funds, build a good diversified portfolio, control your emotion, build different buckets that match your goals, but a reasonable investing strategy. Unbiased, probably the most controversial one on the list, and even Tyler and I discussed this, because I feel better saying this. Every advisor has some form of conflict or bias. It's just, how do they disclose it to you? That's really important. Like, we give all of our commission salespeople a really hard time. It's still not my favorite model, but like, I would give kudos to the life insurance agent that says, hey, listen, yes, this is whole life insurance. I know Dr. Dolly hates it. I'm gonna be honest. I'm gonna sell you this, and because of the amount of premium you're putting into that, I'm gonna make a pretty darn nice penny. I'm gonna do good. Here's how I'm gonna do it. I would have a much higher respect for that person compared to the people that are just like slinging it just for all that behind the scenes. But I even come back to, our side of it in terms of flat fee. Like, you could still have, like, flat fee is the preferred model when you kind of go through like the white coat investor side of things. But at the same time, like, if you found a flat fee advisor, but that advisor is not doing good, consistent work for you, that could become a conflict, right? You're paying them a flat fee of $8,000 per year, but you're checking in once per year. They kind of say hi. They say, hey, investments look pretty good. All right, I'll catch you next year. You're overpaying. That's not good. You don't want that. You want to make sure you're getting that bang for your buck. Now, the good thing about flat fees are you at least know what you're paying. You can actually quantify it. Same thing with 1% models, right? The AUM model. You could have two people both paying $10,000 per year based on their 1% fees. One advisor could be underpaid at that number, right? They should be getting paid more. That's the quality of work they're doing. Or another one, that's like borderline negligence, and that's definitely being overpaid. So my main thing here with anything in terms of conflicts and biases is that you just need to understand, like, that you want them to explain that to you. Hey, here's our model. It's not perfect. This is why. Listen, I do sell some commission-based products, but I think you need disability insurance, and here's what I'll make. So just understanding that. And I think, again, anyone can find this video based on this topic, but our main audience is physicians. You have to discuss and disclose those types of conflicts. Sounds simple, but our industry makes it very difficult. So unbiased, just make sure they're disclosing anything that could be a conflict. Last two on the list. Number 7, fairly priced. This one, to each their own. Again, I'll put this post in there. Dr. Dolly has his range in there. My bigger thing here would be know what you're paying, right? Only you can decide, is that fairly priced? If you feel like you're getting a ton of value and you're paying $10,000 per year, good, keep going. If you see what you just got and you're paying $10,000 per year, you're like, make a change, right? Have a discussion with that advisor or numerous advisors, interview a few advisors, but fairly priced. And this is where I think AUM gets a bad rap, because the more assets you get, all of a sudden you get $3 million invested. It's not as simple as 1% for most firms at that price, but it's $30,000 justified. It's $50,000 justified. It's $15,000 justified. Now, our firm, we do cap our fees. That's something we've always done since day one. But again, not here to kind of talk how we built it, but more or less to give you context on what you're looking for. But fairly priced is just know what you're paying. Know what your flat fee is. If you're paying a 1% fee, ask that advisor to say, hey, can you just kind of give me like ballpark? If my portfolio is $700,000, I'm paying $7,000 per year. If it's $3 million, am I paying $30,000 per year? And there's usually breakpoints in there. So that's why I say don't always trust 1% as 1%, but just know what you're paying. Make them tell you that up front. And they're going to always, like, if it's a 1% number, it moves with the market. Flat fees stay the same, but flat fees still have to be increased because they're not linked to anything based on inflation, like your investments are, things of that nature. So number 7, fairly priced, but most importantly, know what you're paying. And then last but not least on Dr. Dolly's list, tied in with other services. Now, this is the one I always chalk up as we have a deep bench, right? We don't sell products. So if you need disability insurance, term life insurance, we don't sell it, but we have a very good bench of individuals that we know and trust that will take care of that. I don't file your taxes. We love tax planning, but I will not sign off on your 1040. We have an accounting firm that we team up with to help our clients, or we work directly with our clients. We don't do estate documents. You're going to want an attorney for that one. We don't do contract reviews. While we understand bits and pieces on the financial side, you do not want me understanding the legal jargon of your non-compete inside of your medical contract. So we have attorneys that do that too. So tied in with other services, just meaning that we have a bench. We can't do everything perfectly. So we have these other experts around us. And you want to see that same thing. Again, whether you are a physician, whether you're in tech, whether you're a professional athlete, whether you're a retiree, you want to make sure that they have that skill set of bringing in people to make them smarter, but put you in a better spot. So I love that one. And I put one more note that I wrote down here. If you had to interview 3 advisors, and let's just say their credentials are all the same, they're all very smart people, fees are very similar too. Maybe a couple $100 here, a couple, $1,000 there, but all things considered pretty darn close, right? Skill set, fees. This is where personal fit is so important. And this is where you should be interviewing more than one advisor. One of my favorite things when I get on an icebreaker call for our prospective clients is I've interviewed this advisor. I have 2 more interviews to go. Whether they hire us or not, I know that they at least got different opinions. They heard different voices. They saw different faces. That's really important, because if you take your time and you get this right now, You take the time to review all these things, you get a few advisors, you do a few interviews. Yes, it takes some time, but you should now have your advisor, your person, your people for really decades. I mean, you could argue the rest of your life if you take the time now to get it right. So make sure that personal fit is important. And what I mean by that is, again, everything else the same. Like, I am high energy. I talk a little bit faster. I move my hands a lot. I say these are all my Northeast ties, right? Maybe that doesn't jive with you. Maybe, you want someone that talks more like this and just kind of gives it to you straight, and to each their own. But you need to know who your perfect fit is, especially in today's world, whether it's Zoom, well, Zoom for client meetings, this is YouTube. But the virtual relationships, if it's in person, these are things that you got to match up and get right at the start. And then you should not have to worry about them going any further because ideally you got your person, your team going forward. So that's what we got. What to look for in a financial advisor. I gave you my wink earlier, right? But in all seriousness, find a few great advisors, interview a few advisors, take your time on this and get it right the first time so you never have to worry about it again. As always, I didn't think this video was going to go 15 minutes or so, but we did. We got 15 minutes because I can talk with the best of them, right? Talking circles around you. Thank you for hanging out with me for the last 15 minutes or so. If you've not subscribed to the channel, please do so. Click on that bell icon. You also get a notification every time we release a new video. Questions, comments, drop them below. We love that. We love to build content around you. But again, thanks for hanging out with me for the last 15 minutes or so, and I will catch you on the next video.